tradition this day and age to read any good news on the newspaper page. And love and tradition of the grand design, some people say is even harder to find.
All right, guys.
Let's do it.
Another episode. What are we calling this? It's still all things real estate, right?
Yeah, our wonderful consumer clients, subscribers haven't really thrown out those ones that we've embraced yet, even though we said it was a $500 contest, right?
I think we're just going to do an Instagram poll. We're going to pick 3. We're going to put them out on Instagram, and then we're going to look at maybe changing the podcast name.
What's wrong with our current name?
Because there's about 10 other ones called All Things Real Estate. It wasn't the most creative thing that we kind of threw out there, but it worked. Yeah. Now we need to go to version 10.0.
And it says Ben Frieden under it.
Well,
that's a whole other story. And that logo is a little.
Yeah. Well, the person that put
that logo
and put Ben's name on there as the author of our podcast is no longer with us. So.
Oh, that figures.
Yeah.
Okay.
All right. Cool. Well, let's jump into the market minute. Just really quickly, Santa Clara County. I got some interesting numbers for you guys today.
Us too.
Yeah, for you too.
Because they've been changing so rapidly, huh?
Yeah. Well, that's cute, but anyway. All right. 574 active single-family homes. Yep. So we're kind of staying where we're at. Don't worry. I'll address your question. I see the smoke. So 574 single-family homes, 613 pending. So again, we have less than 1 month's worth of inventory. Now, condos and townhomes, we have 250 active and 289 pending. So again, we still continue to lack inventory. Aaron's prediction of 1,600 homes.
Coming in here.
Oh my God!
So
our total actives is 819. I thought that was just single families.
No, that's for both. So and again,
what did I say? 1,800.
And yeah. So and again,
I think it was a $5,000 bet too to one of our favorite charities, right?
I think so.
5,000.
Wasn't it 5,000? I think so.
We'll have to go back and check the tape, but this is a market minute. So 574 single-family homes, 250 condos and townhomes, for a total of just over 800 properties for sale in all of Santa Clara County. Now, coming soon inventory, we're sitting at about 275 properties, all classes, coming up. Now, this is kind of interesting. What I wanted to jump into, quick question for you guys. Lowest price single-family home in Santa Clara County. How much and where is it?
I'm going to say $799, maybe near downtown.
650 15th Street.
Location correct-ish?
I'm going to say yes, like 680.
For $460,000. Oh. And this is a home you can actually move into.
1,500 square foot lot.
You could actually, I made sure it was something you could actually move into. 2-bedroom, 1-bath home, 1,150 square feet, right around Children's Discovery Museum. What? It's a POS, which is a real estate technical term.
Not point of sale?
Yeah. Stands for a piece of something. But now here's the more interesting one. In all Santa Clara County, what is the most...
Wait, so what was that number?
$460,000.
And you could move in and get a loan on it?
You can get in, move in, get a loan. There was a smaller seller rent back they're asking for. So it is actually
that's what they're asking, though. So what would you expect for that to sell for?
It's pretty rough. So, and it's, some very small lot right by Children's Discovery Museum, downtown San Jose.
Great location. Central location.
Essentially located. Yeah. It's got some challenges over there. But now, this actually, most expensive home in Santa Clara County actually just got listed today. Where is it? How much is it?
Santa Clara County.
Santa Clara County. So from Gilroy to Palo Alto.
I would say 55 million Palo Alto.
I'm going to go 44 million Woodside.
Well, I know the most recent one was 11.8 million. Mm-hmm. That was in Los Gatos.
Gotta go way up. Dude, you're competing with All
right.
Okay.
I'd say 92 million bucks Atherton.
All right. Atherton is not in Santa Clara County, is it?
No. So who you work with matters.
Oh.
So Jeet is correct. It's in Palo Alto. Oh. The house is $21 million, 5,500 square feet on a half acre.
Wow.
Now here's the interesting thing. They bought this home in 1998. So 25 years ago, they've owned this home. How much did they pay for it in 1998?
Oh, I can tell you that one.
Did they add square footage?
Same house.
Same house.
All right.
1998?
Yes, and it's worth $21 million now. What did they pay for it in 98?
I'd say 2.8 million bucks.
Ooh, I was gonna say 4.3.
No.
Yeah, I would say like 4,
4 million
three and a
bucks.
half, 4.
They paid $2.4
Ow,
million
damn.
dollars.
That's it, bro. That's because I was an agent. I'm the only one that was probably an agent back then.
They weren't even alive.
In 1998.
Yeah.
That's
Yeah, what year were
year-
you guys born? What year were you born?
98 December.
There you go.
Hey.
My son was born in 98. Yeah, my daughter actually.
I'm 93.
Yeah. So, but here's my point. 25 years ago, they paid $2.4 million for a home that is now selling for $21 million. So almost 10 times the return on investment. So when people say, is now a good time to buy?
So, well, I mean, here's a crazy thing. That exact same stat, you said 5,500 square feet on half an acre. Right here in Los Gatos, we have a house, exact same stats, 5,500 square feet on a half an acre, and it's at 6.3 million bucks. They just reduced it to 6.3. So drive a little bit, save a lot.
Yeah.
Give us a call. We'll be more than happy to sell you that house.
Well, we'll sell you the one Palo Alto.
There you
too.
go, too. Sure.
But yeah, I mean, it just, because when people ask,
Okay.
is now a good time to buy?
So let me ask you this. If you take in all considerations of a neighborhood that you'd want to live in, right? Decent schools, maybe not top 10.
Yeah.
Where do you guys feel the best value is in Santa Clara County right now?
Best opportunity for future appreciation or
All that. Best appreciation. You feel safe walking around the neighborhood, decent schools.
I'll answer that, but why I don't like what you just said is because if you bought it for 21 million now, are you going to get a 10x return on that in 40 years, 20 years?
Maybe not.
200 million?
Maybe not 10x, but I will challenge anybody that if you buy a house in Santa Clara County, you hold on to it for 10 years, you will never lose money.
So Aaron just brought up this conversation in our Mega Agent Mastermind, basically asking the question, which we've talked about on this podcast before, why would a buyer buy right now at these prices? And the entire room basically said, the sooner you get into this market, the better. I can't tell you how many times, we'll buy a house for $2 million. How in the hell is it going to go to $4 million? Well, guess what? It does, especially 7-10 years down the road, right?
Exactly.
I mean, it just happens. So if that is a true value of 21 million today, if that really is, I mean, those type of homes could easily go from 21 to 40, 50 million bucks over time.
Yeah.
I mean,
Well,
it happens.
coming from the guy who said we would hit 1,800 single-family homes. But to answer your question, because I think it's a really good question,
affordable, great areas to live, good areas to live.
I think Campbell,
Okay.
because of the
Has value softened in Campbell? Because I mean, they kind of
Yes.
A little bit,
Yes,
yeah.
and I have the stats to back that up in just a second.
yes, I think Campbell, and my reasoning is it still has a really nice community feel.
Okay. I'm going to add one more component to this. Let's say I could only spend up to 1.5 mil.
It's a little harder. Can you get into Campbell for 1.5? No, not really.
Not great.
You're buying kind of a dump.
Maybe
But
I do at home.
A
Since
bump
you-
for
sin-
1.5 million.
since
bucks.
you added the component, one thing I wanted to finish with Campbell is I really like the proximity. You're a bit farther as the bird flies, or however that saying is, but you have San Tomas Expressway,
Yeah.
17,
Yeah.
280.
A
You
lot
have
of
different
access points,
avenues
right.
as opposed to
Well, plus you got the trail.
like the
downtown.
downside to being in
Right.
Cambrian or South San Jose is you're just that much farther to get on the freeways
Correct.
or Almaden.
Yeah.
Absolutely.
Yeah.
So if we look at the peak of May of last year versus where we are today.
Yes.
So that actually goes into your questions. Where have prices not rebounded yet? So this is kind of interesting. From the average price point in Santa Clara County in May of 2022 was 2.269
That's
million.
right. Yep.
Okay.
Yep.
Where is it today?
2.2.
2.2.
2.188 to be exact.
Actually, 2.164. I pulled it today.
Oh damn.
So,
number's wrong.
but the point is, it's within 50 to 100,000 of where it was at our peak
Well,
6 months ago.
And that's exactly what we just came back from
Yeah.
this meeting when we were saying, listen, because that's the feeling, right? We're still multiple offers. Things are flying off the shelf again. And the question was, wow, well, we all agreed in our entire industry, pretty much, those of us that actually produce, that March of 2022 was the peak of our market. The question that was posed, are we back to another peak in the market now?
And it depends, because if you look at Willow Glen,
Right.
95125, it is back to where it was in May.
Okay.
If you look at San Teresa 95123 or Campbell 95008, it's still almost 10% off.
10% off.
Of where it was back then. So if you're looking for value and opportunity,
Right.
I love Campbell. Average price point right now 1.89. 95123. back in May, average price point was 1.6.
And where's 95123?
So Santa Teresa, South San Jose, right? Great area over by the foothills, depending on which side of Santa Teresa you're on. So they peaked at one average price point of 1.6 million. Right now it's 1.4. Okay. So so I still think there's opportunity to come up in Campbell, opportunity in South San Jose.
Mark, before you say anything, that house you sold on Manischewitz Court was the absolute
Who you work with
peak.
matters.
That house today, I looked it up before this podcast. I would say should sell right now for about 125.
We had an
You
offer.
had an offer at 1.9.
1.9. and we actually sold at 175.
Yeah, because you basically said this is going to be so far. I think
I knew the buyers were going to walk.
you actually
because
taught
it
me
would not have
something.
appraised.
You taught me something that
In
day.
fact, it only appraised for 1575.
Yeah.
You taught me something that day that I had never thought about. When the appraisal, as a listing agent, the appraisal is going to be so far off that you have to call the other agent and be like, "This is just you need to rewrite because this is
Well, yeah, they were 200-something thousand
you're
over.
300 grand higher."
David just said it. They were 250 grand over the highest offer that we already had, right? And I knew the agent was new.
And was out of the area.
Yeah, and so we're getting in front of the issue, right? So we're addressing it up front. So we were not into contract, all that other crap, because I'll guarantee you that would have fallen out.
Yeah.
We would have had to put it back on the market and we would have sold it for 1.5.
Absolutely.
Yeah.
Right.
And to that point, TFTs, which are transactions that fell through, are at an all-time low right now.
All-time low.
Yeah.
So I believe, going back to that question, like affordable areas and stuff, and it has challenges, but I'll tell you, the ones that I've seen the highest amount of hit, and you don't really think about this too much,
Hits meaning positive or negative?
decrease in value, right?
From peak to now.
Correct. Los Gatos Mountains, Area 23.
And you're going to say that.
I mean, and yes,
I
it's
believe
challenging.
it.
You got Highway 17, you got the fire issues, all that stuff, but you can get some great values up there. If you're willing to drive up there a little bit, I mean, you've got 3,000 square foot homes that you can buy for that 1.5.
I really think that COVID artificially inflated the values out there because
100%.
all of a sudden everybody wanted to get away from the city.
Yeah.
Right? And drove those prices up. And you're absolutely right.
Yeah.
I mean, I know you've got some sellers out there where you're challenged about what they paid versus what it's worth today.
Under 1.5,
Without a doubt.
95054 by Levi Stadium. Telling you, you should see what they're building out there.
Okay.
It is going to be nuts. Yeah, G has it pegged. Alviso.
Although I just heard a report. I heard a report that over the next 10 years we have a very, very high chance of having a major earthquake.
Yeah.
And Alviso is going to be one of the highest impacted areas because the whole thing was Alviso and Alameda because it's all mud. And when that stuff liquefies,
Like the
during
ground.
an earthquake,
Liquefaction.
oh, yeah.
You know what? We should get our local insurance
100%.
agent on the next podcast
Yeah.
to talk about.
We're talking about
earthquake
insurance.
So
Yeah.
again, great meeting we went to that David didn't show up to, but we were talking about insurance. I mean, so we talked about the fire insurance scenario. There's now a concern of forget about fire insurance, just the size of the house. These insurance companies are not wanting to insure these 6,000 square foot plus homes, which is going to be very problematic because if that's the case, no mortgage, right? So they're going to have to be cash sales. So how do you explain that to your client?
Yeah, cash sales.
You have an uninsurable property.
I mean, one guy was talking about insurance being like 80,000 or something
One of them
a
was
year.
$440,000
Yeah.
a year for insurance.
So your buyer pool, if you're a seller, goes from
Yeah.
the masses to very, very few people.
Wouldn't at some point you think the government step in?
Well, they have a
tried.
California Fair Plan,
Yeah.
right? But they give you the most minimalistic of insurance. So, if you got that much wealth, a lot of them are now going to self-insure type of a scenario and just, go with a gamble. I mean,
Nice.
listen, we have properties in our area that have never been insurable. You guys know where that's at?
No.
Never been.
Is it in Los Gatos or
Nope.
Morgan Hill?
Nope.
Neither?
Santa Cruz County,
Santa Cruz County.
Potbelly Beach.
Oh,
Those houses that are right on the sand, you'll never get those insurable. You can't
Potbelly
insure those.
Beach.
Yeah, it's right through New Brighton. You go to the right, and there's
Never
houses
heard of
literally on the sand.
but also over there, the Coastal Commission pretty much runs all that
Jesus.
area,
Good
right?
luck. Yeah.
And they're just super hard to work with.
Yeah, I mean, though that area, Potbelly Beach, you would not be able to build there today. I mean, it is literally on the sand with the waves coming right in. Oh, there's Jay.
Tell them to come in.
All right, we got our guest.
Yeah. Oh, we have a guest.
We have a guest. Shows up late, but that's okay.
Hey, he told us he was coming late.
So who is this?
This is
Yeah.
Dave. This is Dave Campagna,
Dave.
the cream of the crop.
What up, Dave?
Pick of the pack.
Welcome.
The number one.
Oh, he's already knocking over the set.
And what does Dave do?
Dave, please talk into the microphone and very briefly Tell us about yourself.
Oh, in February, I decided to get into the mortgage business. But it was
Great timing.
February of 1991.
Woo!
So I've been at
you
it
go.
for a little bit.
Oh, yeah, me beat, man. I'm 93, 91.
Yeah.
Wow.
And on our sheet here, it
You
talks.
dye that hair?
No, this is all natural. I got a little gray on the sides here.
I'm impressed.
I'm going to get the ears lowered probably next week. My haircut lady actually called me this morning and said, hey, when you coming in? So.
Well, I appreciate Dave coming to the table. He's one of our partner mortgage brokers, and appreciate what you do for us, Dave. So
Yeah.
Thank you for joining.
And we're just,
Absolutely. Thanks for having me.
We're talking all over the place here, but
we always do.
But did you have something specific
Yeah.
for Dave since you invited him today? If not, I'll jump into something that
you
has
jump
to
into
do-
it.
All right, so this isn't necessarily lender specific, but you can talk about the ins and outs. I've been getting asked a lot lately, is solar worth it? Now, we may have talked about it in the past. Every article you read on Google says it increases the value of your home. I don't know if that's true. There's a lot of people out there watching and listening that want to know, is it worth it? What do you guys think?
Here's my take on this. Generally speaking, the person who benefits the most for a full house solar, and of course there's all different types of solar, like net zero, all these other ones, is the buyer. Because generally speaking, the seller is never going to get their ROI.
Right.
It used to be about a 12-year. I think now it's maybe 7 with some of the credits that come through. Most of the time, the seller's selling it before he gets his full ROI.
Right.
He or she gets his full ROI back. So in my opinion, if you're going to be there long term, you're going to benefit from it. Maybe, but it's the buyer who truly benefits from it, in my opinion. And yes, it is a benefit to the property. Would it increase the value? I think it does.
Jeet's the solar guy. Jeet, what do you think?
I think I just got solar installed last year at my house. I think it's great if you have an EV. Like it really mitigates your
EV,
electric vehicle, right?
Yep.
It mitigates a lot of your gas spend, and I used to pay like $250 or so in PG&E, and my solar bill is like $125 or $150, and I get a true-up bill if I use more than that. So I think it does. If you are a homeowner and deciding whether it's a good thing, I think it is.
Okay, but let me ask you this: how many years is it going to take you to recoup the cost of what you paid for solar?
I paid $0 down.
Okay.
So for monthly, if I'm spending $250 on PG&E, with solar, my bill's a lot lower.
So then did you do the PPA program where you don't own it? It's not a lease. It's like you're renting. They're putting the panels on and they're selling you the power for less than what PG&E sells.
No, I own it with $0 down, and with I got it last year early, and it took a few months to get it done. And when the rates were a lot lower, so my monthly cost, it was like a 3% or 1.9.
What's your monthly payment on that system?
$150.
150 plus plus the PG&E, which is around 120. So you're paying about 250.
No, PG&E is only like $10.
Oh, I thought you said it was 120. Okay.
I have it on my home as well.
Okay.
Yeah, well, and to your point too, I bought my home. It has a system on it. We're remodeling it. We're going to upgrade the system, and I'm going to try to go with a net zero. Tesla has, I think, a program where you don't have any money. You don't put up any money. You just make a contract to buy the electricity from them. Is that?
No, so Tesla has different aspects, right? You can get the Tesla roof, or you can get the Tesla solar.
I heard the
with
roof is a big challenge right now.
Yeah, with like
materials.
But I think Tesla has the cheapest system out there by far, but their process is more hands-on. So if you want to get it done, it's like more.
David,
more
did you say that you just purchased one, or
you've
you?
had-
Yeah, wrote a check, purchased it,
okay.
bought it.
Bought it outright.
Okay.
Right, bought it outright, got it.
How long ago was that?
That was in summer of 21. Yeah.
Okay.
So,
Okay. So
relatively
recently.
new.
Okay.
Right?
What's been your
I wrote
experience?
my experience is like I put everything on auto pay, especially like utilities.
Yeah,
they're
sure,
coming every
sure.
month.
Yeah.
Your
Set it, forget it.
internet's 120, whatever, like
Yeah.
stuff like that. And I'm like, I haven't paid PG&E in I don't know how long.
Yeah.
So I actually did a search through my bank account looking for it. Couldn't find it. It only went back 6 months. Of course, I can go back further, but
Right.
I logged into PG&E, and this was in October of 2022, and the last time I had paid a bill was in March. I didn't pay for anything at all, not even gas.
Right.
Because I was producing enough energy
Okay.
to offset even the gas bill.
Interesting.
In fact, at the time that I logged in, I had a $10 credit.
Wow.
Okay, so again, back to is it worth it? So if you wouldn't mind sharing, roughly what you paid, you probably got the tax credit.
Right.
How long will it take you to recoup that spend?
So when I was being sold the solar, they said my recoup time was going to be 6 years. That was my break even on a purchase, and I did not finance it, right?
Right.
So yours, you finance, so you have to factor in that finance cost, but you were fortunate enough to have a very low interest rate on it. Since I purchased it, I did 2 other things that made the performance better. And what I did was I got a new furnace. I'm in a 2-story home. I split it, so I'm zoned. And I got I got a couple of new ducts to achieve that, and I had a new condenser put on outside. And I work from home, and I work in a little bit warmer climate. I'm a little bit outside of the area here, but in the Bay Area still. And so my office is upstairs, so now I don't have to cool the downstairs to keep the upstairs.
Right? Yeah. Definitely.
Workable temperature.
Yeah.
So to me, totally worth it.
Well, because you got quality of life out of it. You got a better
So
quality.
you
of life
guys
out
were
of it.
going along the line. I don't think that if you're thinking about listing your house for sale, I should go put on solar. No, go paint it instead.
Right. But again, how many years to recoup?
6 years is what they said, but it'll actually recoup faster.
Okay.
Yeah.
So they
Plus-
took
plus
my
again-
average bill for the last 18 months and divided it by the cost. So
Exactly.
That's what I do.
And the quality of life, the enjoyment of the use is a value too with it too.
Right.
Can we shift gears on this? I got a question
Absolutely.
for David. With the way, what do you see the biggest challenge for the transactions that are coming across your desk right now?
Education and expectations,
Okay.
right? Like you say coming across. So they come across my desk 2 different ways. One, hey, I'm really excited. I want to go buy a house. I want to get pre-qualified. And 2, I'm already in contract, which rarely happens, right? And sometimes people will just get into a home right away because they're excited. They understand the process. They got the education. So that's a challenge for a lot of people. As far as on that pre-qual, the threshold to get in has always been down payment, unless you're fortunate enough that you're selling something that built up equity.
So you mentioned education. Where's the lack of education coming from?
For some people, it's how to manage their bills. For some people, it's how to manage their credit, which kind of goes hand in hand.
So financial literacy overall.
Financial literacy, and depending upon your price range, which it's tough to talk about here. I run statistics. I know Dave does statistics a lot too. My areas that I do is just a little bit different area, with the average price in that area being like 1.7. You can't do what you hear on the news. You can't do a Fannie Mae loan. You can't go put 5% down. You need 20% down. But for entry level, some people may decide to buy a condo or PUD, right?
Right.
And for them, they might be buying below 1.2, 1.1, because then you can do 5 or 10% down.
Right.
And they're not aware of that.
Yeah.
They don't understand their options.
They don't.
Is that because they're not coming to you sooner?
Right. And I
Okay.
think everybody thinks they have to put 20% down, and that's somewhat true in our area because of the threshold.
Well, and I think that's
but
what
nationwide, that's a challenge.
right.
That people don't know.
I think it's also the agent they work with, right? Because one of the things that we do is the very first when we bring a buyer in, we send them over to you to get them pre-qualified and help them with that education on it, right? Now, what's the challenge in the expectation dialogue or situation?
Well, so sometimes people are, they want their payment to be at a certain spot, and I go, well, wait a minute. Are you comparing it to what you pay now for rent? And they go, yeah. And I say, okay, well, describe to me the place you're living in. Well, I live in an apartment. It's a 2-bedroom, 1-bath with no yard. And I said, okay, what do you desire? Now, remember, I don't sell real estate, just so I kind of know where you're at geographically. Oh, well, it has to have a backyard. It's going to be 3-bedroom, 2-bath. And then they say, hey, the payment's not the same like everybody says. It's cheaper to own than to rent. And I'm like, well, yeah, but you're not comparing an apple to an apple. If you want to buy a 2-bedroom, 1-bath condo, it will be equal to. So that's why I go to the education piece.
So Aaron has an incredible question he always poses. Why would a buyer buy right now?
Because historically, real estate always goes up.
Wow, what a novel
Just so you guys
concept.
know, this is Dave Campagna to the rest of the world. I call him Uncle Dave because he's been telling me this for I don't know how long, 9 years now.
Does Aaron have a primary residence that he owns?
Hey, he did my last loan. I buy the house, I sell the house. I keep it moving, okay?
I appreciate that. That's
Creating inventory.
Hey,
In the last 75 years, there's only been like a couple of cycles where you would have lost money over a 7-year period. I don't think there's any time over a 7-year period that you actually lost money.
we
Nobody
always,
buys real estate and keeps it for a year.
we always say that, listen, nobody on that primary residence, you're never going to get a deal the day you buy it, but it's going to be an incredible deal 5 to 7 years down the road.
Right. Hindsight's 2020. And I remember the last time that and he was my agent, and we were trying to sell my house and buy another one. And we already picked out the other one and didn't quite get the price I want. And I was reminded, hey, don't worry about what you're leaving behind. Just make sure you can get what you want, which is in front of you, which is the house you're buying. Stop worrying about what you sell that one for as long as you can accomplish it.
Right.
And
it allows you to move on.
I could have put 20% down, but I put a little bit less than 20% down. I did 15% down and paid mortgage insurance, which mortgage insurance rates have just dropped. In fact, FHA just dropped theirs. Why? Because there's no foreclosures out there, guys. It's less than 1% of all transactions nationwide, and according to the National Association of Realtors.
Yep, great point.
You know, something that I'd like to add kind of to that point is I think the news right now, like the general news, is doing such a better job than real estate agents in the Bay Area at saying what is going wrong, right? Like,
What do you mean by
we're
that?
talking about how our market's going up and we're seeing record-setting numbers and all these crazy things are happening. And are we at the peak again from where we were in March, right? But every time I put on Good Morning America, we're talking about how the housing market's going down and we're starting to see interest rates keep going up and we're in a recession and all these bad things are happening. But here we are sitting on a Tuesday with 819 total.
Why is the number one reason with that? The news outlets are focused on the past.
I know, but listen to us.
We're in the trenches every day.
Yeah.
That's the news you got to focus on.
Yeah.
Clark County leads the nation.
Not the crap from 60 days ago, 90 days ago.
Those are lagging indicators.
Totally. I mean, for them to say right now prices are going down, if you believe that, good luck.
Yeah.
They are.
Take that ABC
Prices
7.
are going down. They went from being positive 18 to be
let's
positive
educate 'em,
7.
So
Nationwide.
Before you go,
Nationwide.
yes,
They went from
Nationwide.
positive 18 to positive 7, which is still an increase.
Yeah.
Just not as fast. It's kind of like I'm driving on the freeway. I'm no longer going 100,
But
but
you
I'm
just-
not on the speed limit.
You just brought up the other challenge we have is news is generally on a nationwide basis with the reporting on,
Same
not
with the interest rates.
not drive
Yeah.
exactly, not driving it down on a local basis,
which is what our podcast is.
there you go.
That's why you're all listening, right? So get the local scoop.
Yeah. I mean, here's what's happening, like not just in Santa Clara County, but I have quite a few clients even on the East Bay, like San Ramon, Pleasanton, Fremont, especially. Like Fremont's on fire. I was up against 64 offers, 17 offers, 6 offers.
Wait.
It's like
How many offers did you first say?
64.
6-4.
Yeah, this was
Holy.
a significantly underpriced home. It was probably a 1.415 home listed at $999. They got 64 offers.
Wow.
what does that say? Underpricing property works.
Oh, come on. You want to be the buyer or you want to be the seller and the agent going through 64 offers? They could have
No, you
narrowed
throw
that
away
down,
the
priced it
bottom
right.
third.
Hey, we use a
right.
great
Keep the
system
middle
called
third just
disclosure
in
side.
case,
Yeah.
and you evaluate
I
the top.
think-
Yeah, but we have an obligation to present every offer that we receive to the seller.
Absolutely.
So do you want to present 64 offers that are all over the place,
Yep.
or do you want to present 5 good ones?
Yes, I do. I'd
Okay.
like to present all of
All
them.
right. Well,
Oh, as a matter of fact, I know that because our wonderful team manager, Jessica, had to spend about 4 hours on the last one he did because he had 24 offers come in, and he made her put every single one on her wonderful spreadsheet.
That's not
God
exactly-
forbid you take the top 5, but
Hey, I present all offers. as my-
I've got another question for Dave, and then I'll let you guys bring up some other stuff. CalHFA.
Okay.
I mean, the California Dream. Is it even
Right.
relevant anymore?
Well, they're out of
Where is
money.
this- correct, but they say they paused it.
CalHFA which is the California Housing
Yes.
Finance
Yeah.
Agency. They get their money through bond money.
Right.
They still have programs with basically nothing down. Not that I like to promote that, but the latest one, they still have some of their legacy products available. Their latest one was a 20% gift of equity, basically.
Yeah.
And there was $300 million for that.
yep.
2,300 families were able to successfully reserve
In what, like a 3-week time period?
less than that.
Like
It
less
was
than half week,
released on a Monday. It was Monday, the 27th.
Yeah, 27th. Yeah.
And by Thursday morning of that week, they said that a third of the funds were gone, which means that was really Wednesday night if they're
Right.
reporting it on
Yeah.
Thursday, right?
Right.
By Monday, they said it was half gone. And by Thursday of the following week, they said, we're shutting it down on Monday. But on Friday morning, they really shut it down.
So let me ask
So
you
it didn't
this.
even make it to that following Monday.
So you said earlier you've been in this business since '91, right? You've been through several different downturns and upturns and everything, right? I have my own feelings on this, but my question to you: with that type of a product that's basically 100% down product, what are your feelings of, is it a, I'm putting you on the spot here. Is it a program that you support, or do you think there's some issues that program
there is a lot of bad lending products in the last downturn. We can all agree to that. Maybe some of us weren't around for it, but there were some bad products. Those all went away, right?
Yeah.
Negam.
This product, I'm not saying is, and then to the Negam point, that Negam loan for some people was fantastic.
Mm-hmm.
I'm a laborer and I'm going to be a journeyman eventually, or a foreman, and my income's going up every 6 months because that's how their income is made.
Right.
I just graduated and got my doctorate degree, and I'm going to become a medical doctor. Or I'm at the beginning of my career. My income's going to do nothing but go up. That Negam loan was great for that.
Does Negam stand for something?
Negative amortization, which means the payment you make does not cover any principal, and it doesn't cover enough to cover the interest on the loan, so the interest compounds and your loan amount gets bigger. So if you start out with $100,000, the next month you might owe $101,000 as an example.
Thank you.
So with this other program, I had a specific client that was going to utilize it right here in Silicon Valley. He qualified for $900,000. He said, well, wait a minute, if I use this product, I can now qualify for more because there's no payments on that second. I said, okay, cool, but how are you going to get out of it? Mm-hmm. He was already established in his career. When we combine and that loan program, and I don't mean to get too technical, will allow a higher what they call debt to income ratio, which is 50% of your income.
Wow.
Including your monthly bills like your car payment, which are capped at about $800 nationwide now. Those keep going up. But anyways, this guy wanted it because he couldn't qualify for anything more. So I said, well, how are you ever going to get out of it?
Right.
And he goes, well, what do you mean? I go, well, when rates go down and you want to refinance, they'll let you refinance once, but they're not going to combine that in.
Right.
When you go to combine that in, you're not going to qualify. You don't make enough money. So you're going to be stuck with this until you're ready to sell. And their portion of their equity is going to continue to grow. Now, they did have caps on it. It was no more than 2.5 times of what you borrowed. So if you borrowed $100, then you're going to pay him $250,000.
Yeah.
I don't want a bond program in my pocket like that. I want to figure out, how do I get out of this as fast as possible?
That's the biggest challenge I have with that. Twofold is, one, it's creating affordability to individuals who shouldn't be affording those properties anyways, and potentially putting them in a high risk situation as we had before, right?
Which could come to a foreclosure.
And then secondly, you're looking at the state of California going into the business of being real estate owners,
right?
Which is I think problematic in itself. But that's my personal opinion. With that, thank you, Dave. Answer my questions.
Yeah, well, I mean, I think we covered a lot today. Aaron, do you have anything else before we go?
So one thing that I hadn't heard until today was that there's a bill proposed for the capital gains exemption. Currently, it is $250,000 for single, $500,000 for a married couple, and it has been proposed for $500,000 and $1 million if you are married. And the reason being is finally enough states have enough appreciation in their homeowners' properties that they've basically gone to the legislator and said, "Hey, can we get a little break here?"
I will
to be important.
I will say, unless that bill, because I'm just getting wind of this now. Unless that bill was introduced by a Republican, there's no way it's going to pass, because it's always been something that's been kicked around by the Democratic Party because it favored the East Coast and the West Coast, which tend to trend blue. And Republicans have shot it down, and we have a
I mean, it's being supported by both sides at this point.
That would be incredible,
because as Aaron said before, it was the coastal states that was impacting. Now it's pretty much across Middle America because the equity has appreciated so much.
Yeah,
there is no name for that bill yet. It is just being proposed. The goal is that if it gets approved, should be on the books by the end of the year, or there's other things with this bill too. It's kind of like, we get into the discrimination of single individuals, right? So you have the marriage side of it as well. So there's a lot of things that are kind of spinning around on this thing. But
they should call it the hurry up and pass it bill.
Yes,
and the additional benefit, not just tax wise, but it will increase inventory on our market.
Yes,
yeah,
because 100%. There are people that's sitting on 100%. So much equity they're afraid to sell because they don't want to be taxed.
So the most interesting thing that I thought of or heard during this conversation today that we had was that original bill for the 250 and then 500. Do you know when that was introduced?
No.
1997.
And I think
It's never changed.
The awesome thing that they're doing on this new bill too, it'll increase based off of index and inflation.
See, that's
Right.
great.
Which is
So it'll
awesome.
continue to go
Yeah,
up.
to Aaron's point, they haven't increased that. It hasn't been kept up with the cost of
living
living at all since
or-
1997.
And here's the other cool thing here in California. You said, hey, that's going to open up more inventory, which I believe that it will as well. Because if let's pick on an area. Let's just pick on Almaden for 30 seconds. And I raised my children in Almaden. They went to the schools. They have great school districts in there. And now I'm an empty nester and I've got this 4 or 5 bedroom home and I want to sell it. And I go, well, wait a minute. I paid $300,000 for that house.
Yep.
That's in the high 1s to low 2s. I got capital gains, but where am I going to move to? When I move somewhere else, now here is the tip, and this might be the biggie for everybody watching today, is that, if you're over 55, you can move your tax base.
Exactly.
So along
Property
with that,
ta- property tax base for those
So
that
along
don't
without
know.
having to pay the capital gains, you can move that tax base. Because when I went to go sell my own house, that was something that I was I'm not 55 yet. I'm only 53.
Right.
But it's something I'm just like, well, where am I going to move? My property taxes are going to go up, and I'm going to pay capital gains.
Right.
Yeah. Well, hopefully the bill passes and
Absolutely.
we'll keep
Without a
everybody
doubt.
posted. All right. Well, Dave, thank you for
Thanks
being
for having me. Great.
Yeah.
Great to see
our
all you guys.
guest, and we'll see everybody next time.
Sounds good, guys.
See ya.
Take care. Bye-bye.